Welcome again everyone to the Manage Well with me, Divya Tusnial. Today we welcome another very special guest from the BFSI industry. Let's join our hands together to welcome Manish Kothari, President and Head Commercial Banking, Kotak Mahindra Bank. Hello, how are you?
Hello, good to see you.
Same here, so nice of you to be here. That's it. So Manish, you've been into banking for last 20 years and you've been heading many verticals. One of the businesses which you've had is the SME sector. So from the SME customer perspective, what do you think pandemic has had an impact on their behavioral pattern, negative on the negative side also and on the positive side also?
I genuinely believe that every adversity is actually an opportunity. And the resilience of an entrepreneur really shines through during these times.
Wow.
And the pandemic was no different, I must say. Yeah, while although the initial phase of the pandemic, most SMEs were impacted from the perspective of cash flows, but I guess the agility of the SMEs, the government support which they got, saw them actually come out much stronger. In fact, I found most of the SMEs come up the curve in terms of managing their costs better, improving the efficiency of their businesses, managing the technology element dramatically better, and actually grabbing newer opportunities during this period.
So basically necessity is the mother of all inventions in adversity.
Absolutely.
So that's what has been happening here. So Manish, in a scenario of slowdown or stagflation, what has been the behavior of the customer in the SME sector? SME as in the small medium enterprise entrepreneurial sector.
So in a scenario where you have high inflation, high costs and also slowing of growth, risk management plays a very, very important role. And that is true for any business. And more so for small and mid-sized companies, it becomes extremely important in terms of how they should be really managing a scenario like this. The first and foremost, if I may use the word, is how they should manage their liquidity during these times. And the best way to manage liquidity for a small company is to manage their working capital cycle better and shorten the working capital cycle so that you can even lesser margins, lower profits, but you can turn around your inventory as much faster. It improves your profitability. Second thing is to reduce your costs. Look at every small cost from a zero-based perspective, not from a historical perspective, but from a zero-based perspective. Third is to strengthen your balance sheet in terms of ensuring lower leverage, because that is what can help you absorb some of the shocks which come because of this kind of a scenario.
So you have very nicely listed down 3 points, I mean, as a takeaway advice for all the SME entrepreneurs. So what are the common mistakes or what is their actual behavioral pattern which they actually do? I mean, of course, they may not be following these 3 steps very sincerely as you have mentioned. So what is the common mistakes which they do which led them into trouble or a problem or a financial crisis?
So the most common mistake which I have seen is people do not focus on their working capital cycle.
Okay.
A lot of people mistake profitability with cash flows. Yeah, so a product can give you better margins, but if you do not get your money on time, or if you have to stock up on inventory, and hence your overall working capital cycle is much longer, your actual profits are much lower because a significant part of your cash flows are blocked in the working capital. And during difficult times, liquidity is the most important thing.
So for all those young entrepreneurs who maybe are doing their startups or looking into some kind of advice shield from the bank, do we have anything like that for them? Like this is the opportunity where you can invest. Of course, most of the startup peoples from the traditional business background are getting their family capital into the business or instead of raising it from the outside. So do we have advice or a planning system or a professional advice from the bank to help them reach out to more investors or maybe build up, like, or is it a loan to the bank? How is it?
So it depends upon the requirement which the concerned business has. If it is a pure startup, I would say that what the startup needs, if it is from the point of view of equity, the equity either has to come from the family or the idea has to be so strong and the business model has to be so strong that you can find angel investors. Yes, the bank is not necessarily in the business of angel investing, but the angel investor networks are pretty strong now. And a good idea with a solid business model and a good management team can easily get funding these days in terms of being able to source money from there. Otherwise, invariably, I have found, and partly true, why people end up investing in real estate, because that's the easiest way of raising money from the organized setup of banks or NBFCs, where loan against property is something which people are in a position to
loan against
raise.
property is a common thing.
So whether it is working capital or loan against, or a term loan term requirement that you have, if you do not have a track record, if you do not have much of equity to really put in terms of cash flow, then a lot of people end up using that as the mode to raise funds.
So, Manish, in continuation to our earlier discussion, as a banker, which are the key risks which can derail an SME, small medium enterprises, and what are the steps which they can take to protect themselves?
What I shared earlier, 2-3 key things come to my mind. First thing is ensuring managing their liquidity better. Working capital, better working capital cycle, or ensuring that they have sufficient cash flows arising out of their business, and hence managing the right products, managing only the right geographies. You may need to think it through to ensure that better liquidity management. That is one. Second is, of course, ensuring lower leverage on their balance sheet. It is, if you are going through a difficult phase in the economy, or if the economy is looking tough, that is the time to ensure that you may manage your leverage in a way. Leverage is effectively debt on their balance sheet, ensuring that the debt is comfortable, which you can service after withstanding shocks that the economy can provide. Volatility can lead to that in a business. And third, if you ask me, which is very, very important, and most people end up ignoring, is ensuring that you invest in the future from the perspective of technology and also in terms of people. Because what you want to achieve 2 years down the line, 3 years down the line, you have to think through the investments today. And those are the three things which I would say every SME should think it through in terms of when they are planning their future.
So, when you mention investing into technology or investing into the people as well, so on what do you give a greater weightage on?
See, both are important. It's not either or. Technology cannot replace people eventually. Yes, technology does make your business far more efficient. There are jobs which technology has started to do, where you do not need people, but finally people run businesses. People meet people, people deal with people, people transact with people.
Okay.
So it is very, very important to invest in people upfront. So if you are a 50 crore company and you have an aspiration to be a 200 crore company, you will need very different kind of people from the point of view of taking you from A to B. And I would say that that's something you have to think it through in advance. You can't struggle with it once you reach there.
Manish, what made you choose a career in banking?
The truth is, I didn't choose a career in banking. Banking happened to me.
Wow.
So I joined Kotak 27 years back, fresh as a management trainee, fresh out of B school, and it was a NBFC then.
27, you said?
Yes, 27 years back.
Okay.
It was a NBFC then. It was not a bank. In 2003 is when we became a bank, and yes, I learned banking as the journey progressed. So, like I said, banking happened to me. I didn't choose a career in banking.
That's like a huge loyalty. 27 years is like huge and really commendable.
It talks a lot about the organization, the people, the culture that Kotak has. It's a very warm culture and organization which has a lot of. We call ourselves professional entrepreneurs. If I was, so that's the piece. If I was not working here, I would have been possibly running my own business. So here, all of us believe that we are professional entrepreneurs running our own business within the guidance and the framework which a company or a bank brings.
So professional entrepreneur is a very nice and interesting term. I mean, of course, it gives a lot of glamour to the whole conversation. And so, but since you have been into banking, as in, I mean, with Kotak, you've been there for 27 years, but with banking, as in, since the time Kotak was formed as a bank, you've been there for last 20 to 21 years. So, how has the consumer behavior changed over so many years? Like, how was it in the beginning and how is it now?
So, significant change. If I may say, consumer has become far more discerning and has dramatically more choices today. Yeah. So, from a pull business, it is now a push business, if I may use the word.
Okay.
So, now you have to reach out to the customer. It gone are the days where the customer would come to the bank. So also service, convenience has become dramatically more important than the product itself. Yeah, the product differentiation is only as much, but service and convenience is become very, very important. Consumer is now ready to pay for service, convenience, the experience that they get out of the entire process. And if you ask me, technology is obviously playing a far greater role. What it used to be, what it is today, technology has also become a very, very integral part of the overall offering that you really provide to a consumer. It's nowhere close to what it used to be 20 years back.
So you've seen banking over last 20 years. How do you see it for next 2 decades from here?
So as
Maybe in 2042, how would it look like?
so banking requirement would remain. The big question, and a lot of people are generally today very, very paranoid about it, is will banks remain?
Yes, will the
Yeah.
bank exist?
So,
Exactly.
definitely not in the present form, if I may use the word. Because banking is an extremely regulated business, because you are dealing with other people's money. It's a very, very highly leveraged business, and significant amount of monies of people are actually involved, and hence it's a significantly regulated business. So I would say that it would not remain in the current form that we get to see. It will be dramatically more digital. A lot of consumers will prefer to the regular banking products would become, if I may use the word DIY, do it yourself.
Okay.
And consumers would be absolutely okay to say that, oh, the regular banking products, we'll consume it ourselves. The user experience that you provide, the convenience of your platform that you provide, all of that will matter far more. And the consumers will look forward to value added products and the knowledge that the bank really brings. All of that will become far more critical for you to really hold the customer. The service, convenience, the value add, the knowledge, and how are you really making a difference to the consumer's life? How are you customizing things to the consumer's preference? All of that will become far more important, and digital will be the way.
So will it be like make your own Sunday kind of thing? You
Yeah.
pick up the actions from here, there digitally, and
Absolutely.
then prepare your own banking plan.
Absolutely. I can tell you we are doing it as we talk. Even the mobile banking experience that we provide, if suppose you are only a liability customer, you will not want to see what are the loan related products or credit card related products which the bank offers. You would prefer the screen to be customized to what you want. And I can tell you that as banks, we are already working towards providing some of those things
Is
to
it?
our consumer.
Oh, you mean you will track the consumer behavioral pattern and customize the screen of the mobile app?
We will allow the
It will not be a
customer,
same
we will
standard.
allow the customer to customize the screen.
Okay.
Yeah, so if you want, you can decide that what are the first things that you want to see on the
Okay.
screen. Yeah, what are the products or details that you, with respect to the products that you want to see on the screen. So there will be a
Wow.
lot of customization that will go in to improve the customer's experience, and those are the small things which will make a huge difference to a consumer and ensure that the consumer banks with you.
When it comes to financial planning or investing, what do you give a maximum weightage on? Whether it is service or maybe return on investment or the term of investment or the simplicity or the sectorial, what is it that you give weightage on?
My personal favorite, if you ask me, when it comes to investing, is simplicity. It
Okay.
is, I think it is extremely important for the customer to understand what exactly he or she is investing into. And for that, simplicity of the product, simplicity of the plan, all of that really makes a lot of difference. We have seen during the Lehman crisis how complicated products were bundled and sold to, customers who wouldn't have really figured what they were buying into. So simplicity is the most important thing when it comes to financial investments. The second thing, if you ask me, is more about ensuring that you create a plan which details your surpluses, your expenses, your short-term needs, your medium-term needs, your long-term needs, and then sticking with a consistency to that plan, and most importantly reviewing it on a periodic basis. Those are the two most important things, if you ask me, I would connect with when it comes to financial investments at a personal level.
So those they were three takeaways from that question for all those viewers who are watching us. So what has been your personal style of investing, as in your portfolio? How does it look like?
So I call myself a medium risk taker and a long term investor. So patient, medium risk taker, and a long term investor. So which is why you would find me largely invested in equities. I follow SIP as the mode at a personal level in terms of deciding my funds and making the choice upfront, and then sticking with it for at least a medium term, reviewing it of course on a periodic basis. I personally do not invest in individual stocks because I don't think that unless I give time to understand them, I should be really investing in them.
So that's more of averaging out in the whole scenario, diversifying the whole
See,
bucket.
over a long period of time, I personally believe that equity gives a better return, and the compounding effect automatically takes no, gets into action, and both put together are a great combination. A reasonable return with the compounding effect can make your investments look very, very different in terms of overall
Okay.
benefit that it gives you.
So thank you, Manish, for sharing such great ideas from your enormous experience. Now we come to the final segment and the most interesting segment of our show, the rapid fire round. Are you ready for it? In which subject were you worst at school?
Physics.
Okay. If you could live anywhere else in this world, where would you like to be in?
India only, and Himalayas.
Himalayas, okay. What's something that you would do, but something you would not like to do?
Leading a very, very regimented lifestyle, which I do every day.
Okay. You bored of it?
No, I love the output that discipline gives, but
Yes.
of course, you never like to be as disciplined, right?
Okay. So, what would you like to change about yourself?
Nothing.
Nothing. Mr. Perfect? What's the first thing you notice in someone when you meet them?
Their smile.
Really? Okay. What is the definition of success for you?
Something that you achieve with peace. Peace
That
of
was a
mind.
very beautiful answer. What brings tears to your eyes?
Onions.
I mean, that was quick. If an autobiography is written on you, then what would be the name of that book?
All that matters is execution.
Very nice. What is your most strongly held belief system?
What your mind can conceive and believe, it can achieve.
That was a very strong answer. Your favorite social network platform and how many friends do you have in there?
I really do not have, I do not, I'm not very active on a social platform while I'm there on Facebook.
So how many friends you have in
I
there?
really wouldn't know.
So street smart or book smart?
Street smart.
That was nice. What was your last Google search?
Today morning,
Yes.
checking the weather because it's been raining cats and dogs in Mumbai.
Again
So,
regimented. Which profession would you prefer if not BFSI industry?
I would be a businessman, like I said earlier.
So professional entrepreneur, as you mentioned earlier.
Professional entrepreneur, I'm already a professional entrepreneur. If I was not
Just an
at
entrepreneur.
Kotak, I would have been an entrepreneur myself.
Yes. So one more for you. What is your weakest point?
Seeing tears in my daughter's eyes.
Oh, So with this, we come to the end of the rapid fire round. It was a great interaction with you, and there were so many insights to take away from the show. And I am sure the viewers enjoyed the show as much as I loved presenting it to them. And of course, they'll take away a lot of key takeaways for the SME sector, small medium enterprise, for them about how to stop failing, or how to take care of their operating surplus, or how to take care of the whole business regimen as a whole. Yes, that had been a very insightful thing for them. So Manish, I would like to say thank you to you for coming over to my show and creating such a wonderful experience. For Thank you so much. Thank you for watching Manage Well with me, Divya Tusnial. Do not forget to subscribe and hit the bell icon, and connect with me for any query on the financial market on my Facebook, Instagram, Twitter, LinkedIn, Manage Well show handles, or write to me on divyatusnial.com.